welcome once again with your boy Investor. So today's video we're gonna share some key points about the Q2 earnings of Tesla stock of Tesla, the company. But before getting into that, I'm just gonna share with you that I sold a little bit of Tesla, and of course I'm gonna explain why I sold only 10 shares. So now I have 100 shares left. Why did I sell 10 shares? Here is the thing. People who have followed me for some times, they know that I got pissed and they regretted the time where the market went down in May. I didn't have money to buy any stock. But the thing is, if you remember, Tesla went down to the 500 something at one time, then I bought everything that I had remaining in terms of money. I bought Tesla stock. Now, rethinking about that, I made some money on it, so I'm thinking to sell. I thought about selling 10 shares and put that money into the account as a sideline in case something happens, because there's a lot of uncertainty going on when it comes to the pandemic, to the new variant, and to inflation, and stuff like that. So that's why I sold only 10 shares. I have 100 shares left, but it is what it is. This is I think I made 27% on it, so that's cool. So now let's get to the most important thing. And if you see now, the even though the earnings were good, when you check the price, it's not doing that good. Look, the price is after all at 667. It's nothing. I mean, with this good earnings, it's only 667. It's nothing. So let's see here. So Q2 2021, they had 97% year-over-year growth when it comes to automotive revenues. The regulatory credit is 354 million, and they have a gross margin of 28.4%, which is huge for an automotive company to have 28.4%. Of course, you're gonna say 28.4% because it includes 354 million as regulatory credits, but we can see afterwards that without this amount you will get 25.8 or almost 26%, which is as well huge for the company. So they made a total revenues of 18.958 or 18 what I'm saying. I need to sleep, I think. But 11.958 billion, or let's say 11.96 billion. So they had a total gap of gross margin of 24.1%, which is really good. Operating expenses 1.57, growth rate 98% here, and 28% here, and 20% here. Operating margin 11%. Let's go to this one. Net income attributable to common stockholders 1.14. EPS, this is the one that you see a lot of companies. They always, even the Wall Street, they think about this one a lot. EPS. So the EPS came at 1.45, and the one that was estimated is 0.98. I think it was estimated. It came 1.45, which is huge, up 230%. This one, diluted gap. This gap, I think it's without the regulatory credit 1.02, which is up. Look, it's up 920%. Net cash, I'll just be down 2.487, up 106%. When you see this amount of growth in a company, and you are thinking, it's overvalued, it's not. Look at the amount of growth it happens every quarter. It's always 70, 80, 100%, and people still bash on Tesla as an overvalued stock. But you know what? We will see after 5 years. Those people, they will start crying again. Okay, so free cash 619 million. That's good. Let's go to production. So they have produced 206,421, which is 151% year over year. Deliveries, they delivered 1,895, S and X's, the new X and X's. Of course, minus 81% because they are not delivering as much as they could, but they can ramp up that production as well. But there is a huge demand for the S and X, new S and X now. The total deliveries is 201,304. Let's see here. Solar deployed megawatts 85, up 85 to 15%. Sorry. And salt storage deployed megawatts. I think this is the megapacks or the batteries storage deployed. Yeah, this is the megapacks. Look, it came at 1.274 billion, up 204%. I mean, look at this shit. Supercharged state in 2066, up 49% for people who think like that there's not enough superchargers. Look, there is a rate of growth that is really important to see here. Of course, there is some news here which is really good, and I'm gonna finish the video with this. Production ramp of Model S progress over the course of Q2. This is US, California, and Texas. We expect it will continue to increase throughout the rest of the year. Given strong US demand, the majority of all Model 3 and Y production was delivered in North America. Build out of a Gigafactory, Texas continued to progress in Q2 with commissioning having begun in some areas of the factory. Commissioning begun in some areas of the factory. This is the most important point in here. Shanghai. While we experience minor interruptions due to supply chain challenges and factory upgrades, production in Shanghai remains strong. Per our planned roadmap, we recently introduced a standard range version of Model Y in China. Okay, so this is the most important one. We have completed the transition of the Gigafactory Shanghai as the primary vehicle export hub. For now, Berlin. While our global production lines continue to run fast as possible, European demand remains well above supply. This one is important as one for people thinking, there is no demand. I live in Europe, I live in Norway, I know there is demand here, resulting in growing wait times for delivery. Yeah, this one a lot of people are pissed about, but you know what, they still wait for the car anyway, because they know they are getting something good. So we continue installing equipment, have begun testing tools, and are working as quickly as possible towards starting production in Berlin while growing import volumes in the interim. Now, when it comes to the autopilot and full self-driving, we know now that they have subscription model, which means you pay $200 I think per month, and you get the self-driving software. If you have the how do you say it, the computer installed already in your car. Otherwise, you need to pay another $1,500 to install that computer, and then you can pay $200 every month for the subscription. So it needs to be compatible with the full step driving. This is one of the important things here. We have successfully validated performance and lifetime of our V4680 cells produced at our Kato facility in California. 4680 cells. You see a lot of talk about 4860 cells. So they are almost done with that. We are nearing the end here. We are nearing the end of manufacturing validation at Kato. Fit quality and yield are at viable levels, and our focus is now on improving the burst of manufacturing process that currently bottleneck production output. Yeah. Of course, energy storage went up, solars went up, services they are almost break even. This is good, means there is not so much loss there. Here is another important point for those haters. We plan to grow our manufacturing capacity as quickly as possible. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. Let this one sink in. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. I mean, where do you see this? Where do you see that? I don't give a shit. You won't see it nowhere else. In some years we might grow faster, which we expect to be the case in 2021. Of course, the rate of growth will depend on but on average you will have 50%. They have sufficient liquidity to fund the product roadmap. Of course, there's some pictures here of the Gigafactory Berlin. Look how it looks like. This is inside the Gigafactory Berlin paint shop. This is the paint shop. This is Gigafactory Texas 6 months ago and now. See the rates. Everything is growing faster than you could imagine. This is the Gigafactory Texas stamping press. Those presses. Look how many presses here. 5 presses, I think. 5 presses or something. Look, Model Y body shop of Texas. It's in Texas, Gigafactory Texas. Of course, people, employees. Gigafactory Shanghai expansion continues. They still expanding. Of course, there is some key metrics here. Let me check something here. Financial statements. Where the fuck can I find it? Wait. Hold on. What is the... I'm looking for the... Because normally they write it down if it's... Oh, okay, it's here. So, this is 28.4%. This is the gross margin, automatic gross margin gap. And when you look, if you exclude regulatory credit, you will have 25.8%. Look at the difference. For people who talks about no, they are not profitable if they don't have those regular credits, show them this. It's almost 26% without that shit. With that shit, it's 28.4%. And Elon Musk wants to increase it to 30%. That's what he believes. He will increase to 30%. Yeah, so this is for today's video. I hope you like it. If you're new to the channel and you wanna find your way back, please consider subscribing down below. I hope you are enjoying. For people who have Tesla stock, congrats. Even though the stock that won't react, but still you are holding something. One of the best, if not the best, companies nowadays. It's a blue chip company. It will do phenomenal in the years to come as well. It will be normal to see Tesla beating earnings from now on, and you will always have haters, but the most important thing is not to listen to those haters. Listen to yourself, do your due diligence, look at these stats and decide by yourself. So I hope you have a wonderful summer, enjoy, and see you next time. Bye bye.